Thank you for joining us at xm.com for this Forex Preview video. With central bank meetings out of the way, investors will be eyeing data to gauge the possible next up leg in the dollar. I'm Cristina Marujos. Joining me today is our investment analyst, Cristina Bartenido. Cristina, the spotlight will probably fall on Friday's PCE Inflation report. However, housing data will also be interesting to look at, especially at new home sales for August. What are we likely to see in the numbers?
Hi, Christina. It's nice to see you here. That's right. Traders will shift attention back to the data this week after the Fed delivered another bold 75 basis point rate hike last week. While there are no major data releases besides the U.S. core PCE inflation report on Friday, but I think house data could be worthy to look at today and tomorrow because there's a persisting slowdown in the market which needs some attention given all these growing recession fears as well as the bad memories from the house bubble back in 2008. So traders may look for any signs that the US economy is indeed in a downfall, while the forecast suggests that the 7-month-old downtrend has further extended in August, which will be, of course, discouraging for the economy. But personally, I don't think that the U.S. house market will become a serious concern in the coming months. Of course, the latest slowdown in rent prices in August and rising mortgage rates can somewhat justify the slowdown in the house market. But overall, house prices may not easily cool down in the coming months because inflation and the war in Ukraine are still keeping construction materials quite expensive. Moreover, the labor market is still very tight in the US, so there is little risk that households will default on their loan payments. We will get more updates on personal income and consumption when the core PCE inflation report comes out this Friday. There's actually some optimism that there might be a slight improvement in the numbers. The core PCE inflation may come slightly higher as well at 4.7% year on year. So overall, I think that unless we see a big negative surprise in consumption, the house market may stay out of the headlines, even though the weakness may persist.
Now, Cristina, in an environment of a strong dollar and, of course, the Fed not letting up on its stance to bring inflation down, how crucial will this week's data be for market sentiment?
Well, I believe that markets will become more data sensitive in the year ahead as traders are trying to figure out when the Fed will stop raising interest rates. But besides the personal consumption and income figures, this week's numbers could be relatively a weak market mover since the US CPI inflation report has already provided evidence about how inflation evolved in August. The house figures could also be a future topic for discussion. So unless we see a significant surprise in the data, I think the US dollar may not drastically react this week. Probably comments from Fed policymakers will be more important for the green pack, especially if they provide some clarity about what the Fed is thinking to do next. If policymakers use a hawkish tone to communicate markets, then dollar yen may not hesitate to break the resistance at 144.95 and run towards the 1998 peak of 147.71.
Cristina, thanks so much. And thank you for watching this Forex Preview here at xm.com.